And you can see we're creating 5-minute gap right here. Here's another 5-minute gap here. Okay, and this is why I say not the gaps alone. Okay, I'm showing you guys to understand this. It's not just the gaps alone. Okay, you do not want to be just trying to trade every single gap that you see. There is more that gets into this. What is our structure, guys? What is our momentum? Where is this market? If we're in a bullish market, we're in a bearish market. Look how the market has been moving. We've been going towards the upside. We've been sweeping lows, been going higher. Boom, we're sweeping lows. We've been going higher, right? This is a bullish market. This is a bullish trend. So my bias here is to take this market higher, especially since we have equal highs right here, okay? So when the market opens here on Tuesday, I want you to see we kind of push lower, and look what we push lower into. We push lower into a 1 hour gap here. When the market pushes into a 1 hour gap and it pushes into a higher time frame gap, look, I am not looking to take a 1 hour gap most of the time, guys. When the market pushes into a higher time frame gap, I am looking for a rejection. When I see the rejection here, I will zoom into the 5-minute and look for bullish fair value gaps. When we get into the lower time frame here, you can see the market pushes lower into this 1 hour gap right here, and look at the rejection on the 5-minute time frame, right? Look at this candle. We reject, we break this 5-minute bearish gap, which is an indication that buyers are stronger than sellers. When you see the market is invalidating, and this is basically what inversion means, all right? When you see the market is invalidating bearish gaps right here, when you see the market is invalidating bearish gaps, those are known as inversions. Okay, a lot of people trade those inversions, including me. This right here gives you the idea, and it just tells you that, hey, yes, the market was pushing lower, but look what we pushed lower into, a 1 hour fair value gap. And based off that 1 hour fair value gap, we got to push higher. Now, if this market was to invalidate this 1 hour gap, I would have expected us to continue lower to take out these Asian lows. Okay, but we did not invalidate that 1 hour gap. We rejected off of it. And once we rejected off this gap, we invalidated this 5-minute gap. We invalidated this 5-minute gap. Now, the safest entry here, and you're probably wondering, okay, how do I take an entry off this? What do I do? You would be taking a bullish breakaway gap. Okay, and what does that mean? As soon as the market invalidates this last 5-minute gap, since that's the only thing holding us lower, right? This bearish 5-minute gap right here that we invalidated, that's cool. But this one is the one that we really want to get invalidated. Why? Because that gap here is the one that is nearest the invalidation of this high, and that'll create a BOS. So once I see the market invalidate this gap right here, I know for sure that we're going to create this BOS. Once we create this BOS, I know that we're going to go target these highs. Okay, and once we target those highs here, what's left? Look, guys, we have a lot of gaps right here for the market to fill, and we have liquidity. So understand, when you see the market has like this price action that is bearish like this, and you see that we have so much inefficient pricing, the market likes to fill those gaps, guys. Use these gaps as targets and as entries. All right, so in this case right here, the best entry would have been waiting for this second gap. So we have this candle right here, we have this candle right here, and then we have this candle that closes up here. As soon as this candle closes, boom, take your entry. Stop loss here goes underneath this gap right here, right there. Boom. And then you could target a 1 to 2, which is right there. And I believe this market give you a 1 to 3 too, probably later in the day. Let me get out of replay mode real quick. Yep, later in the day here, if you were targeting a 1 to 3, the next day you would have got it. But this is why we only go for 1 to 2s, guys. 1 to 2s are literally a blessing. 1 to 2s will get hit majority every day. All right. And look what happens the next day here. This was before market open. This was before market open. Market sweeps. We go higher. Now, I'm going to draw this to your attention. We're going to put this here. And this is why liquidity is important. Boom. Look what's happening, guys. The same thing here. the next day, this is Wednesday, right? These vertical lines represent New York Open. This is the time that you want to be looking for these fair value gaps. It's the time that you want to be in this market because that is where the volatility comes in. All right. Now you're probably wondering, what do I do this day? What do I take this day? Okay. Look what you have here, guys. You have, boom, market opens right here. What does the market does as it opens? I'm sorry. What does the market does as it opens? We open, we immediately push to the upside, and look what we do. We take out liquidity. These equal highs that we're talking about, the market raised those highs, okay? And look what we do. We have this 5-minute gap right here. That 5-minute gap right here, I'm gonna delete this. We have this 5-minute gap right here. And then we have this 5-minute gap right here. After the market sweeps these equal highs, after we take out liquidity, the market immediately pushes towards the downside and we invalidate both of these gaps. What does that tell you guys? That tells you that we have sellers that are strong in this market. If you see the market sweeps liquidity and we invalidate fair value gaps that led us towards the liquidity, that is a nice confirmation entry to look for shorts. So how would you have taken shorts in this case right here? After these two inversions, like we took the last time, after these two inversions, guys, here's your trade, right? You have this strong candle. As soon as this candle closes, that's your entry. You can put your stop loss all the way right here. And you target your 1 to 2. There's a safer entry for you guys right there, right? You enter right here, boom, you target your 1 to 2, covering these two gaps right here. Stop loss goes above the wick. I'm sorry, guys, right there. Boom. That's the trade, okay? And look what happens. You can see this trade right here lines up perfectly with the 1 hour gap, right? This trade lines up perfectly with the 1 hour gap that was created the previous day before. The market goes lower. So you're taking a trade here. You're taking a bearish trade lower, targeting a 1 hour gap. And you see the market goes exactly there, rejects, and we push. You're already out of your trade. That is a nice and clean target. So this is just a simple example here of how you can use fair value gaps. I'm just kind of showing you guys. I can show you guys so much more examples. We've only covered 2 days. We can get into the next couple days, but I'm going to save that for another video. I don't want to make this video too long. I just want to give you guys this kind of background and just introducing you guys to the fair value gaps and, you know, how you can trade this.